Board, Ajay Srivastava of Dimensions Corporate Finance. Hi, Ajay. We're all in a good mood because it's Friday, but certainly not because of the markets, because it's been doing precious little. FIIs have been selling. Is there anything that could really turn sentiment around, or you're pretty satisfied with the way things have panned out?
No, I think it's been a good market. I think it's been a good market because it rewarded people with patience. It has penalized people who were exuberant beyond the economy can support or the market can support. A very healthy market, the right kind of selling which took place. So all in all, I think, and the market survived the huge shock of what happened with the Adani stocks, which are kind of large in the system. So all in all, you got to be satisfied that we got away with not so much damage as would could have happened given what kind of events took place, global selling which happened in this country, and this whole impact of Adani's saga. All in all, I think we got away pretty easy.
Ajay, would you say that the worst of the Adani impact is now digested and we'll completely move on from there? And any view particularly on the Adani group of companies? Have you bought into any of the names on the dip?
See, we have bought into Adani stocks. About 5 days back, we were on another channel. We bought into Adani stocks. I think but we said very clearly, it's a high risk trade because we don't know where the regulatory action is going to go. There's a parliamentary panel to investigate. All these things have a life of their own and the overhang which keeps coming up to the market. So yes, we have been buying the shares. That's one. Number two is, but it's still, I would say for investor, it's a high risk. So you need to be careful how much money you're committing to it. And therefore, can you absorb the risk of this kind? Because you've seen the kind of damage portfolios have had. So keep it small, keep it light. But, at the end of the day, the companies have infrastructure stocks. Country needs infrastructure. There could have been excesses. There could have been violations left and right. But broadly, I think as a country, we believe we can ill afford a large shock of this kind on an infrastructure-driven companies in the system. Not saying they should be absolved of if they've done anything wrong, but the fact is, reality is that sometimes, as they keep saying in America, too big to fail, this is one of the sectors too big to fail.
You've bought into Adani Group of stocks 5 days ago. Could I pry a bit more and ask you which are the names that you bought into?
See, we don't allow to name the stocks, but really speaking, there was the frontline two stocks, the mainline companies and power. I think that's what it would be at this point of time. And so that is where we are at this. And, power as a sector, we are quite bullish on. Generally speaking, it's had a bad year at this point of time, but come this year, the Government Electricity Act, if it sees the light of the day, is going to be a great boon for power companies. No competition. If pass-through cost comes through, they're going to reap a huge amount of benefit to it. So power as a sector, we're quite bullish on. But, this was, I would say, an opportunistic transaction more than just a pure play on fundamentals.
What is the trade for summer 2023? Now that summers are going to be hot, some are buying beverages, some are buying cola companies, some are buying both, some are buying beer companies. What is Ajay buying? Is he buying power companies because we will be using more ACs? Is that the logic?
I think the logic is, hi, Nikun. The trade in the market to me still is, use your money to enjoy your life. Using your money to invest is not the best trade for the 2023. To my mind, is the logic still hold? It was in 2022, continues in 2023, because if you're buying stocks, you're buying angst, you're buying uncertainty, you're buying anxiety. So I would say generally as a principle, if you're a reasonably invested investor, adding onto your portfolio is not going to do anything dramatic to it. You will get the returns if the portfolio happens. But buying more stock, if you're heavily invested, which most of India is today, I don't think it's a sensible strategy. Having said that, it's like this. You expect that people will have more cold drinks, people will buy ACs, but that doesn't translate to, stock price increases at the end of the day because our P's are still very high in the market. So if you take a good company like say Varun Beverage, I'm not saying recommend it. It's not a reasonable P. It's a high P stock. It may still show growth, still give you income, but it's a high risk venture. You saw what happened with liquor companies. They had the best quarter, but the stocks did not perform, or poor management. So just because industry is good, you had so many weddings, so many hotels opening up, the liquor stocks did not perform. They were poor managed companies. So, divorce yourself to the fact that economy can be very good, markets can be very good, but never underestimate bad management. India is full of bad management companies at this point of time who are not rewarding their shareholders, given what's happened to the economy last year. So I would still say on the side of this, that listen, do not try to invest your money too much, go spend it. But having said that, power, I said only one thing. Pass-through pricing is the key to fortunes of power companies. If the government has the gumption before election year to keep on going on that path of allowing Electricity Act pass-through pricing, it's a great boon. It may happen this year, may happen post-elections, but eventually people will have to pay for power, and you have a monopoly situation. You can't get new companies to come in. Three companies control almost 80% of power in this country, supply in this country. You can't go wrong in that. You may go wrong on timing, but you can't go wrong on fundamentals.
Yeah, that aside, as a news flash by the way, iPhone assembler Foxconn plans a 700 million assembly part in India. Now, this is where iPhones are getting made. So soon, the phone which you have now could be iPhone made in India for India. So that day is not far away when the iPhone which you would be having in your hand could actually be made in India. I think that's such an incredible feat, so to speak, post-COVID, at least for India. Ajay, that aside, you track Vedanta very closely. We've had, discussions on it that the dividend deal is too tempting for anybody to ignore. What is happening there?
It's an offshoot of what happened at Adani. They're saying that you're leveraged. Will you be able to refinance? Will you do something strange with your companies at this point of time? That happened. But this is a different case because, Adani came as a surprise. Vedanta carries a lot of baggage of the promoter for 2 decades. So investors who are in Vedanta know the fact of what transpired when they tried to, if you go back to the memory, they tried to delist this company and so on and so forth. They could not do it on regulatory action. But after that date, he has been a persistently good performer company. I'm not saying recommending buy. We have a huge holding in Vedanta to be on for disclosure purposes. Maybe a lot of almost 20% of my portfolio sits in one company at this point of time. But having said that, I think it'll go up and down, but India cannot ignore metal companies. India cannot ignore supporting these kind of companies and the kind of pricing they're having. They're not leveraged by any margin. So yes, there will be an offshoot of what's happening around Adani stocks in terms of the promoter leverage. As an investor, I'm a little less concerned because all it means to me is more dividends, less capex, and you will eventually mining. It's a monopoly. You can't create them again. They have oil. They're the only private company of oil in this country. They got aluminium. They're the largest aluminium. They got copper, which is shut. I think it will start sooner or later, and that will be a very big play in this company. So India has so few plays on the metal sector, and this is a pure play metal company. So you can ignore some of the noises coming from abroad and buy in when the market is right. I think that would be the appropriate strategy than to just jettison and say, oh, it's going to all fall apart. It's not going to fall apart. Mines are not going to go anywhere. Stock market can go up and down, but mines still stay, the metal still stays in the ground.
So can I assume that you own Vedanta and you have every reason that you'll continue to own it?
I own it. I own substantial amount of it, and I will continue to own it. And every correction, if I see very meaningful correction, is on an ad list at any point of time.
Ajay, did you catch the push-up challenge between Dipinder Goyal and Nikunj? Because he recently interviewed him and he actually spoke about aspiring to become a $100 billion company by 2030. Is there anything within this new age tech space that you like, and how would you fare on a push-up challenge?
He caught the $100 billion part, not the push-up part, right, Ajay?
Oh my God! Oh my God! You have taken over the mantle from Rahul Gandhi, have you?
In what regard? I'm sorry, I just complete
push-ups. Push-ups.
Actually, we must go for a game of golf, Ajay. And not that I know that you play golf. Let me tell you that I'll start with a big handicap. Not a pro like you.
Handicap is good. Handicap is good. Remember this always. Handicap is good in this golf. No, I am game for a game of push-ups, but not for a golf because I will let you win. You are in my hometown, so I'll let you win in any case. New age stocks are like wonders. You buy some of them and hope that the star will shine one day. Most expensive stocks at this point of time, all the old investors want to sell the stocks. They need to find new suckers for it. So my view has always been, yeah, you like it, excitement, buy some of it. But if you think it's going to be great returns to you, I think you will be disappointed because everybody else wants to exit. Who is there wants to exit. It's the only case of a company where right from every employee to promoters to investors to everybody wants to exit and find an Indian retail sucker to buy it. Don't be one, I promise you. It's not pretty so far. It won't be pretty in the next 12 to 18 months. It's going to get worse, get more uglier. So I would say ignore the voices, stick to fundamental. If you like excitement, I'll say go play golf on a bet, go to Vegas, do what you like, go skydiving. You will find better stuff. Buying these with my money, somebody else's money, maybe, not my money.
Okay, look for the adrenaline rush from some other ways rather than the topsy-turvy ride that a lot of these new age tech companies have already given you in terms of the share prices as well. But Ajay, I wanted your take regarding some of these PSU banking names as well. They've had a very sweet ride in 2022, started 2023 on a bit of a somber note. Where do you see them headed from here on? Will you be a buyer in even the tier 2, tier 3 names in the PSU banking space?
Can I ask you a question? Do you bank with any PSU bank?
Not really.
Okay, let's do a
But
poll. Who
there's the
banks with the
corporate side
PSU
of the
bank?
world, Ajay, as well, right? Not just retail.
You know what? Can I tell you something?
Sure.
No bank has built value in the world just on a corporate book. It's the most riskiest book in the world because it's so skewed towards a couple of lenders can bring it down. Mudra loans can bring it down. They have no experience with personal loans. So yeah, temporarily always happens that the NPS came down. Did they recover that NPS? The answer is no. They lost the money. They lost public money. Look at the kind of capitalization they got. So yes, that's I keep saying it's a beautiful trading bets always PSU stock because they give you chances to make quick money and lose your money very fast as well. So I'm not a fan of PSU bank. I don't see a rationale why they exist in the country with just so many private banks. They cannot compete with them. They're going into space of personal banking, but they do not understand. They cannot recover this money eventually. I'm not a fan. I don't, and that's why I keep asking everybody that do you use this product of a PSU bank? And most they would say no. Yes, it's a lender for most corporates. You're right, absolutely. They have a large rural deposit base, absolutely correct. But 10 years from now, do you see a future of these banks? I would say very, very doubtful. Maybe one or two may do well, and I would put SBI little out of that bucket of the PSU bank. But others, I don't think they have a reason to survive. And the only reason you might buy is that eventually in the next role government 5 years, whichever government comes, some of these could be privatized and you could get a kicker off it. That's the only reason. Fundamentally, absolutely no. These banks, you don't bank with them for a reason, and that's the reason why you don't buy the stock.
Ajay, this market has been in a sideways trend or no return trend from almost 18 months now. When do you think we will come out of it? I mean, I was discussing this yesterday on the evening show that in Monopoly you have this thing called out of jail card. What do you think is this what will be the out of jail card for the bulls now?
I have a different take, Nikun. Market has been pretty good. If you look at it, if you picked up stocks, even in the worst 18 months, with reasonable Ps or low Ps, you done quite good. If you look at the Stellar ITC, 78% over a year. You see Varun Beverages, you got 48% over the year. So if you look at the market, if you had invested in high P stock like a Page or something, you paid the price for it. If you're invested in reasonably good companies with a lower P stock, you've done decently well. So on a portfolio basis, I'm quite sure most people would find that they have done reasonably well in a bad market. The problem has been the mutual funds. They have not performed and they dictate the trend in the global in the returns part of it. The banking industry has not performed contrary to expectation and people bought stocks at very high levels. SIP is doing nothing better for investors. I think the most dangerous thing ever done for investors is that if you made a mistake, why don't you add to your mistakes? That's ridiculous, absolutely. If you made a mistake, you cut your losses and get out. You don't keep adding it to it. And that's a problem in India has been that retail has been buying consistently and therefore the return percentages are so poor in the market. So I would still say it's not been a bad market. It's been a good market for stocks. But to get out of this, tomorrow Ukraine can have a ceasefire with Russia at the end of the day. Suddenly the market may turn around on just one news that the ceasefire. So, from where it came, the downfall, Ukraine war, we never expected it. From where it can come to take it out of this so-called jail of yours is again an event like possibly maybe a ceasefire or something can help you. But I think you would do justice to your portfolio to stick to growth and low Ps. I think that's where the magic is. Don't worry about market, macroeconomic. This will happen. Too many noises. You will die with analysis and paralysis. Focus on what you like and where you go. Look at capital goods in India. If government is going to spend 10 lakh crores, lots of money is going to come to those companies, right? So these are on a clear growth path. Look at FMCG, MNC companies. They find a way to sell their product, make a margin. That's a safe place to be. So even in this jail, I think you have been misplaced if you are sitting in the jail with your companions of high PE stocks, because that's the way the problem is. High PE, low growth is the problem, not the jail, I think. You need to maybe shift yourself somewhat to the high growth companies which are going to be government largest, and you'll escape the jail. So all not pessimistic. I think there's good science stuff in the market as well, but stick with high Ps and low growth. I think that's a recipe of trouble.
Okay, Ajay, we'll let you go on that note. Thank you so much for joining
Thank you. You
us.
have a great weekend.
You too have a great weekend. Do some golfing. I think the sun is shining bright in Delhi as well. So probably a good time to go golfing.
Thank you very much. Thank you for having me.
Okay.